Joining us now is Brian Will. He's the founder and CEO of Will Restaurants Group, which owns some locations down in Georgia. And Brian, just looking over your numbers, a lot of this stuff I hadn't even considered till you brought our attention to it. And you can explain better than I can, but just overall food costs up 24%, but that includes, like you call them, staple ingredients or poultry, beef, and produce. That's up 40%. Then you throw in labor, up 20%. So all in, I mean, it's significantly higher, and you've had to raise prices.
Morning, Joe. Yeah, and what makes it worse is overall revenues are down 11%, even after raising prices 20%. So if we hadn't raised the prices, our revenues would be down even more.
And the whole supply chain issue, that I had no idea about this, and this is something that's interesting. That's repair and maintenance costs, and it's backed up. You say that's up 50%, and you, let's say at your wing place, you use fryers. If one of those things go down, it can take you days to just recoup one single repair session for some of your equipment.
Yeah, we used an example that we had 2 fryers go out last month. And the first one, we had an emergency, so we called a maintenance company. They charged us $1,300 to fix the fryer, when I can buy a brand new fryer for $800. So when the second fryer went out, I couldn't afford to fix it. So we literally drug it out back, and I went and bought a new one. And yeah, if you look at a $48 average ticket on a table, and we have a 15% average margin, that's a little over $7 profit. That fryer goes out, it takes 111 tables just to pay to replace the first fryer. God forbid the second one goes out or something else goes wrong. So we could end up having to need hundreds of customers every time a major repair comes.
Just looking at all the metrics for this year, Brian, I feel like, I mean, it's tough to run your business. So revenue's down 11%. I don't know why. People are migrating to fast food, which is also expensive.
Yeah, you know, it's funny. I was in the restaurant the other day, and I watched somebody come up to the bar and order 2 drinks, and it was $30. And the guy looked around and went, "Oh my gosh, these drinks are really expensive." Yeah, costs are going up, and people are thinking twice about going out and eating a lot. And we rely on people to come back. Yeah,
you're like a microcosm. So costs are up and revenue's down. It almost sounds like stagflation. How about labor? What does that situation look like for you? Everyone's making more money everywhere, so you gotta keep up?
You know, the restaurant industry is very tough, because if we are too hard on people or make them work too long or whatever, they can literally go across the street and get another job in 5 minutes. So they want more money, and it's very difficult to manage people when jobs are so plentiful in the restaurant industry.
You're opening up more spots. You rethinking that, or just hoping for better times next year?
Well, you know, the one we just opened last week, we signed the contract on over 3 years ago. So construction has also been ridiculous. Our cost to build a restaurant went from about $900 to $1.3 million. And we didn't think that was going to happen 3 years ago when we signed that contract. So construction costs across the board are killing us. So yeah, it makes you think twice about doing another one.
So are you not opening, you don't have any plans in the works now for new ones beyond that?
I currently do not have any plans, Becky, to open another restaurant. I got to figure out what's going on with this economy and this market, and how we're going to do.
Brian, is inflation moderating or not?
Not, we work on what's called dynamic pricing, particularly in the restaurant industry, which means they charge me a cost plus 6%. I've had months where my cost of chicken went up over 100%, but my menu is printed, so I can't change my cost or my pricing on the menu. So we end up having to eat that dynamic pricing when it goes up, while we're hoping for it to come back down. So it's very difficult to run a restaurant profitably, much more so than it has been in the past.